Are you a business owner that doesn't work with SVB and has no correlation to them? In this video, I'm going to break down 3 big things and why you still should care. The first is how the SVB collapse happened. The second are the downstream effects that might impact you in your business. And the third is how to resolve them. So check it out. I'm going to break it down as simply as possible and as quickly as possible. Here we go. So why did Silicon Valley Bank collapse? First and foremost, you need to understand that SVB was banking 50% of the venture-backed startups out of Silicon Valley or the Bay Area. This is fundamental to the whole problem because those startups that are all venture-backed needed more money to keep growing. And so as interest rates rose, their ability to raise money got destroyed. So many of those companies kept withdrawing funds but were unable to raise additional funds, which would have been held at SVB. So as SVB started to lose their deposits and still have those customers pulling money out every day, every week, every month, they didn't have the ability to meet the customers' withdrawals. And I don't think that they were close to zeroing out, but the ratios became apparent. So on March 8th, 2023, Wednesday, SVB sold a $21 billion bond portfolio at a $1.8 billion loss. That was the first huge red flag. Needless to say, anybody paying attention noticed that and thought maybe it would be a problem. SVB also had to cover their loss, so they did this through a capital raise by liquidating their own shares. So they sold $2.25 billion in common equity and preferred convertible stock to fill that void on March 9th. That was Thursday, or they at least made the announcement to do that. When they did that, at the end of the day, they closed at a 60% decrease in value because that was the second big red flag. When that happened, the venture capitalists in Silicon Valley all spread word amongst themselves and encouraged the companies that they had in their portfolios to get their money out of SVB. This is what we refer to as a run on the bank. Those are the bullets of how this happened. So Friday, March 10th, the FDIC stepped in and said Silicon Valley Bank was shut down and placed it under its receivership. Now, we had a pretty significant gap on Saturday and Sunday, really unsure of what was going to happen and very concerned, as people should be. Late Sunday night, the president of the United States made an announcement and said that the federal government would be covering 100% of the deposits over the FDIC insurance. This was a really important distinction because the main concern is that the FDIC only covers $250,000 of deposits per EIN number or per legal entity with each bank that it's with. So if your company has $1 million sitting in SVB, only $250,000 would be covered by the FDIC insurance and paid back. So what had happened on Friday was when it went into receivership, any customers of the bank that wanted to pull out more than $250,000 only got $250,000 and the rest of it was locked up in the receivership. Then you'd have to go through a legal proceeding to get the rest of that money out. Not ideal for any business owners or any other consumers of the bank that had money there. So, what are the downstream effects of the SVB collapse? First and foremost, there's the obvious stuff, which is that if there was a run on Silicon Valley Bank, which was the 26th largest bank in the US with $211 billion in assets, logic would say that there could be a run on regional banks that hold a lot less money and are not scrutinized with the same level of regulation as the larger banks are. But number two, that's really important for business owners in particular to be aware of is tons of different businesses that you might use used SVB. So namely payroll companies and payment processors. These are huge ones. But the single largest problem is when you combine those two things. If there's a run on the bank, how all of these services that are tied to regional banks could impact you, specifically payment processing. If you're accepting credit cards, the likelihood of a regional bank being tied to your credit card processor or your payroll, but credit card processing specifically, is really high. And the likelihood of you knowing what banks are involved, whether it was SVB involved with your processor, Stripe, Braintree and PayPal, Shopify payments, which is Stripe, Payoneer, Bill.com, have all used SVB at some point in time. The likelihood of you knowing if those banks or regional banks are tied to your processor is probably pretty low. The best course of action is to make sure that you have some diversification in what you're doing in your business right now. One of the core principles at EasyPay Direct is that you should never have a single point of failure for your business in any area of business. Our gateway was built to allow you to have multiple merchant accounts so that if you ever have a challenge, it never collapses your business like SVB. We want to make sure that the banking relationships that you have are stable, but even when you expect them to be stable and there happens to be a problem, you have other options that are there to protect you.